Palantir stock bubble warning. What you must know now. Puzzle piece step 1. Understanding the hype around Palantir. Palantir Technologies has become one of the most talked about tech stocks in recent years. Known for its deep ties to the U.S. government, defense agencies, and cutting-edge AI applications, it's a favorite among both institutional and retail investors. Its recent performance has fueled even more enthusiasm, with bulls calling it the next NVIDIA and predicting a potential trillion-dollar valuation. But beneath the surface of this AI excitement, there are serious concerns, many of which signal the formation of a stock bubble. Chart increasing step 2. Analyzing Palantir's sky-high valuation. Let's start with the numbers. Palantir is currently trading at price-to-sales, P/S, ratios of 80 to over 100 times and forward price-to-earnings, P/E, ratios of over 200 to 290 times. To put this into perspective, a typical large-cap tech company might trade at 10-20 times earnings or 5-10 times sales. Even high-growth AI companies like Snowflake or CrowdStrike generally stay below 25 times P/S. Palantir is far above those levels. This means investors are pricing in extraordinary growth and near-flawless execution. If the company stumbles even slightly, its valuation could collapse. Analysts say a return to more realistic valuation multiples could mean a 60 to 75% decline in the stock price. Classical building step 3. Over-reliance on government contracts. Another major red flag is Palantir's revenue concentration. Currently, more than 70% of its income comes from government clients, especially defense and intelligence agencies in the U.S. This presents two problems. Limited flexibility. Government contracts can be rigid and slow to scale. Political risk. Any budget cuts, policy shifts, or administration changes could directly impact Palantir's earnings. While Palantir is trying to expand into commercial sectors, its government backbone makes its revenue stream vulnerable and inflexible. Moneybag step 4. Profits propped up by interest income. One of the most overlooked issues with Palantir is how it generates profits. A large portion, up to 40% of pre-tax earnings in 2024, didn't come from its software business. Instead, it came from interest income on its massive cash reserves. This means that rather than growing profitably through product sales or commercial expansion, the company is benefiting from high interest rates and sitting on idle capital. What happens when interest rates fall? That income disappears, and with it, a big chunk of Palantir's earnings. Receipt step 5. Shareholder dilution and insider selling. Palantir is also diluting shareholders at an aggressive rate. In 2024, stock-based compensation, SBC, soared to nearly $700 million, up from around $475 million in 2023. This means new shares are constantly being issued, diluting the value of existing shares and potentially lowering future earnings per share. Even more concerning is the pattern of insider selling. Executives and insiders have offloaded billions in stock. Insider buying has been minimal, which is often a red flag suggesting that even top leadership doesn't see long-term upside at current prices. Warning step 6. Momentum over fundamentals. Much of Palantir's recent surge is being attributed not to earnings or contracts, but to hype, specifically the broader AI boom. Retail investors have flooded into AI-related stocks, pushing prices higher without fully understanding the fundamentals. Meme stock dynamics are at play with high search interest, social media buzz, and speculative buying. This type of price movement, driven more by sentiment than substance, is a classic sign of a speculative bubble. Brain step 7. What are analysts and experts saying? Opinions are sharply divided. Bearish voices argue the company is priced for perfection, and any slowdown will cause a crash. Even optimistic projections suggest the stock is 2-3 times overvalued. The AI market, while real, is filled with overhyped narratives that won't justify these valuations. Bullish voices, on the other hand, believe Palantir is building the OS of the AI battlefield, especially with defense and security clients. Commercial revenue is growing steadily quarter over quarter. If the company executes well and AI demand explodes, today's price could still be justified. But even bulls agree this is not a stock for the faint of heart. Volatility is a given.